It's time for Business Blueprints, from pixels to patterns. This is where we break down the journey of tomorrow's titans. Welcome back to the Deep Dive. Today we're diving into a stack of fascinating sources that might seem pretty different at first glance. We're covering everything from, the basic principles of economics and civilization.
All the way to cutting-edge energy tech.
Exactly. And practical business strategy, plus the potential endgame for digital money, especially with AI in the mix. So our mission today is really to connect these dots, pull out the key insights, and figure out what they mean for, building the future, whether that's a business or just your own financial plan, or even maybe societal progress.
Yeah, it's a great mix. We've got material from Robert Breedlove talking with Safety and Emis about his new book, and also a look at Michael Saylor's, unique Bitcoin strategy.
Right.
Then there's stuff from Y Combinator on fusion energy, which is super interesting, and some really practical advice from Alex Hormozy on business focus. It hits both the big picture forces shaping things and the smaller decisions that lead to success. Should be a good one to unpack.
Absolutely. Let's kick things off with those foundational ideas. This comes from that discussion Robert Breedlove had with Safedine Amos about Safedine's new book, Principles of Economics.
Okay, so Safedine's goal here, he's pretty explicit about it, is making Austrian economics. Well, understandable, accessible. He's not trying to write another huge, dense book like Mises' Human Action or Rothbard's work.
Which are amazing, but yeah, they're a commitment.
Totally. They're foundational but tough going. He wants this book to be for everyday modern readers, people who are busy, maybe smart, but don't have endless hours for super dense theory. He even mentions his brother, who's a doctor, right? Limited time. That's the kind of person he had in mind. It's meant as a gateway.
A gateway to what specifically? What are the core ideas he's trying to simplify?
It seems to boil down to concepts like capital, time preference, and economizing. He's arguing these aren't just, dusty economic terms. They're really important principles for how you live your life, how you make decisions, how you build for the future.
Like understanding why saving actually matters.
Exactly. Or why delaying gratification isn't just about discipline, it's about building something better down the line. He thinks understanding these ideas is key to personal success and also for society to flourish.
And time preference.
Yeah.
That's a term Safedine has really pushed into the conversation, hasn't he? Especially in the Bitcoin space, thanks to the Bitcoin standard.
Oh, definitely. He really popularized it there. It feels like almost every other conversation in that ecosystem comes back to time preference. It's the root cause for so many problems. We see maybe unsustainable debt or environmental issues or even cultural shifts.
The idea being that if we're all focused on right now, the short term,
then we make choices that hurt us later. High time preference, prioritizing immediate gratification over future well-being. It affects everything, from your personal bank account to big government policies.
it feels linked to maturity somehow, like individual maturity, but maybe societal maturity too.
Yeah.
Use that parenting example, which I thought was pretty striking.
Yeah, that was a good one. Because from a purely short-term view, having kids looks, kind of irrational, right? Less sleep, costs a fortune, less freedom. All those immediate metrics go down.
Right.
But he argues the meaning in life goes through the roof. It's a massive long-term investment. It requires incredibly low time preference. You sacrifice comfort and ease now for this huge payoff later, embodied in your kids, the next generation. He framed it as kind of pushing back against what he called anti-natalist propaganda, which he thinks only focuses on the immediate financial hit.
Interesting. So this individual shift towards looking further ahead, that's mirrored in how civilizations develop.
That's the idea, yeah. And he draws on Hans Hermann Hoppe's work here. The argument is that the whole process of civilization, historically speaking, can be seen as this gradual decline in time preference. As societies get more complex, more stable, people become more future-oriented, more willing to invest, less likely to just consume everything right away.
Okay, let's dig into the consequences of that. Economically, you said it's crucial for capital accumulation.
Absolutely fundamental. Capital,
Yeah.
the tools, the factories, the software, the knowledge, it doesn't just appear. It's built because someone chose not to consume something today. They decided to dedicate time or labor or resources to creating something that makes them more productive tomorrow.
A classic fisherman example, right? Building the boat instead of just fishing with a spear all day.
Exactly that. He gives up eating some fish now or maybe just relaxing to build a boat and a net. Big sacrifice in the present. But then, boom, his future fish-catching ability skyrockets. And you scale that up to, a modern economy. It's the same principle.
So the people who own, say, an airline or a factory,
They're choosing not to just sell everything off and throw a massive party today. They're keeping that capital working because they expect it to generate more value, more production over the long run. Capital literally exists because someone, at some point, gave up present satisfaction for a future payoff. That's the core idea.
and socially, it requires a similar mindset shift in how we deal with each other, not just ourselves.
Yeah, definitely. You can't build complex capital goods or run intricate supply chains without cooperation, without trade, without trusting people to fulfill long-term deals. This means lowering your time preference about how you interact with others, too.
Instead of the high time preference approach of just taking stuff.
Right. The immediate impulse is, I want that, I'll take it. Civilization requires figuring out that cooperation is way more beneficial long term. If I don't rob you, maybe you won't rob me. And hey, if we work together, we can both get way more done than either of us could alone.
The whole sum is greater than the parts argument for society.
Precisely. And this explosion of productivity that comes from cooperation, from dividing up labor, it makes humanity incredibly powerful, even against the strongest individual. The source uses that really vivid example, a 5-year-old with a gun.
Which they only have because of complex cooperation in manufacturing.
Exactly. That child, through the division of labor, gets access to technology that can overpower the strongest person acting alone. All the stuff we take for granted, the abundance, the safety, the tech, it all flows from cooperation, which itself depends on people having a low enough time preference to trust and work with each other over time.
Which brings us straight to private property as the foundation for all this.
Yes, and it's framed not just as an economic thing, but as fundamentally moral. Again, drawing on Hoppe, the idea is that how well private property rights are protected basically determines the moral character of a society. If property is secure, the main way to get wealthy is by producing things others want and trading voluntarily, creating value.
Versus a system where theft or coercion pays off.
Right. If property rights are weak, then taking stuff, using force, manipulating the system, those become viable strategies. It sets the basic incentive structure. Are you rewarded for building or for taking? Saifedean's book apparently structures itself around this. It starts with individuals economizing time and effort, then moves to economizing property, which allows capital building, needing trade institutions, markets, money.
Leading eventually to impersonal exchange.
Yeah, that ability to deal with strangers, people you'll never meet again, trusting that the system ensures you both benefit. That's what makes complex, large-scale civilization possible. Everything from your coffee to global logistics relies on it.
But the source stressed that these benefits aren't just automatic. They aren't permanent.
That's a really crucial point they made. Civilization isn't a destination you arrive at and then just coast. It's an ongoing process, a set of behaviors you have to keep practicing. The good stuff, capitalism, cooperation, wealth, it's fragile. And the argument presented is that undermining private property is the quickest way to unravel it all.
And they specifically point to fiat money, to inflation, as a major modern way this happens.
Yes, exactly. Fiat money, especially when its supply is expanded arbitrarily by central banks, is framed as a direct attack on the private property of savers, eroding their purchasing power.
And the consequences aren't just, oh, well, things cost a bit more.
No, the view presented is much more dire. It's not just about having fewer nice things. It's seen as risking the collapse of the whole cooperative framework. It's like hitting rewind on the flywheel of civilization. It potentially makes humanity vulnerable again, less powerful against nature, more prone to conflict. The lesson they draw is stark. Respect private property or risk losing everything.
It's hard to grasp sometimes because we're so immersed in the benefits, it feels abstract.
Totally. The source mentions that difficulty. How do you explain the value of property rights to, say, a teenager who's always had a roof over their head? Safety. It's like explaining air. It's just there. That's why, historically, institutions, religion, culture, state propaganda even have spent so much energy reinforcing these ideas, because civilization depends on each generation buying in.
Okay, so this brings us to Saifedean's really specific contribution here, linking societal time preference directly to how hard the money is.
Right. This is where he offers this very mechanistic, almost engineering-like model. He basically says the hardness of money, how resistant it is to inflation or debasement, acts like a control knob for society's collective time preference.
A control knob. How so?
Well, the argument is that money printing, central banks expanding the currency supply, is essentially a violation of savers' private property. It steals their future purchasing power.
So it makes saving pointless, or at least less attractive.
Exactly, it punishes patience. So savers are pushed towards higher time preference. I better spend this now before it loses more value. And when enough individuals shift like that, it becomes a societal trend. More short-term thinking, maybe less focus on quality, more debt, potentially even moral decay. In this view, the integrity of money maps directly onto the integrity of civilization.
Drop a like and share if you find this valuable. And hyperinflation. It's
Yeah.
like turning that knob all the way to zero. Civilization just unwinds rapidly.
That's the extreme example, yeah. The source describes it as maybe the most reliable way to trigger mass psychosis. When money totally collapses, trust evaporates almost instantly. Your circle of cooperation shrinks right down family, maybe a couple of close friends. Trading with strangers, forget it.
Because you can't trust the money or them.
Right, and it creates these awful incentives. People get desperate, they start scamming, stealing just to survive. It's described as a rapid rewind of the process of civilization. Building trust, accumulating capital, lowering time preference, that takes centuries. Destroying it, that can happen frighteningly fast.
It highlights how much we take civilization for granted once it's established.
For sure. People lose the connection between their daily civilized behavior, respecting contracts, property, dealing honestly, and the fact that they have a civilization that allows for things like, well, complex supply chains delivering coffee. The source used that example of someone railing against capitalism while holding a Starbucks latte.
Yeah, the performative contradiction.
Exactly. Enjoying the fruits of the system while seemingly unaware of or even hostile to the principles that make it possible. Debasing the currency is seen as severing that link between effort today and reward tomorrow, making long-term thinking incredibly difficult for everyone.
So where does Bitcoin fit into this picture? Is it just the next phase in this rise and fall cycle, or is it actually different?
That's the million-dollar or maybe trillion-dollar question the sources grapple with. The 20th century gets painted as this era where government-controlled money enabled the debasement that weakened the civilizational fabric. Bitcoin is positioned as a potential reversal of that destructive trend.
A reversal of the reversal.
Kind of, yeah. The source acknowledges the historical pattern. Societies build wealth, they accumulate capital, then someone figures out how to debase the money, things fall apart, morality declines, everyone focuses on short-term nonsense. It feels almost inevitable.
But Bitcoin might offer a way out. A state change, as they put it.
Two main possibilities are floated. The sort of less radical view is that Bitcoin is an exit ramp. It lets individuals or even groups escape the ongoing fiat destruction by saving in sound money. This could maybe buy us another few hundred years, another run of civilization, a renaissance built on preserved capital and low time preference.
Okay, that's one possibility. What's the more distinct case?
The more distinct case is that Bitcoin is more like a fundamental upgrade for civilization itself. Because it's this always available exit option for everyone, the tech barrier keeps getting lower. Could this actually break that hard times create strong men cycle? If the incentives are channeled differently, maybe the destructive phase isn't inevitable anymore.
That gets into nonlinear causality feedback loops.
Exactly. History isn't simple, A leads to B. You get these loops, like private property leads to abundance, which is great. But abundance creates temptation for others to steal or tax it away, which creates instability. The idea presented is that Bitcoin might change how that negative feedback works.
How so?
Instead of just becoming a target, people or societies succeeding with Bitcoin gain power. The incentive to pillage gets subtly shifted towards acquiring the sound money itself. And crucially, if a government or institution treats its people or their capital badly, the incentive to just move your assets into Bitcoin to vote with your feet financially becomes much stronger. This could pressure governments to become maybe smaller, more local, more accountable. It's pitched as a potential phase change, something fundamentally different.
And human reason, as Mises highlighted, is our tool for navigating all this.
Yeah, the source echoes Mises on that. Reason is our superpower, right? Not claws or speed. It's how we figure things out, overcome challenges, build tools. And this applies socially, too. There are always destructive forces, high-time preference actors trying to undermine things. Reason helps us invent defenses, laws, institutions, weapons. And Bitcoin is framed as the latest, maybe the ultimate defensive technology against this kind of civilizational decay, specifically the mob problem.
The mob problem.
Yeah, the idea that historically the value of your money depended on everyone else playing fair. If the majority, the mob, fell for debased coins or hyperinflating fiat, your savings got wiped out too, no matter how prudent you were. Bitcoin, the argument goes, solves this. It gives you access to a sound money system, a civilized economic layer without needing permission from politicians or trusting that everyone else will behave.
It works, even if the surrounding system is chaotic.
That's the claim. The source mentions it, working as a store of value even in incredibly difficult places like Gaza. It's presented as this powerful, civilizing force that can operate independently of existing political structures.
Subscribe to the Snippet Labs YouTube channel. Okay, if the case for Austrian economics and sound money principles is so strong, and the dangers of fiat so clear in this view, why isn't this perspective more mainstream in economics departments?
The source gives a pretty blunt, maybe cynical answer here. Basically, they don't pay the bills of economists. Meaning the current system, built around central banking, government spending, fiat currency. It creates a huge demand for economists who can provide justifications and models that support that system. There's a ton of funding, prestige, jobs available for work that validates money printing, credit expansion, government intervention.
The incentives are aligned with the status quo.
Precisely. If you're an economist telling the people who benefit from printing money not to print money, well, you're not going to get paid by them, are you? The source frames it as a fundamental conflict for what it calls real economics or correct science, like the Austrian school. The financial incentives are just stacked against it within the mainstream.
So how do these ideas spread then, if not through traditional academia? Saifedean writes books, obviously.
Right. Writing books, speaking, getting the ideas out there. The source mentions Saifedean is even okay with piracy if it helps spread the message.
Yeah.
But crucially, the other part of his strategy and the broader argument is buy and hold Bitcoin.
How does that help spread the ideas?
The thinking is, as Bitcoin appreciates in value, the people who understand these Austrian principles, who adopted Bitcoin early, they gain wealth, influence, and power. At the same time, as the fiat system potentially loses value or credibility, the institutions and individuals tied to it lose influence. Less money flows to pro-fiat propaganda. Maybe more attention goes to the correct science.
Kind of like follow the money to find the truth.
That's exactly the phrase the source used in this context. The success of sound money itself becomes the mechanism for propagating sound economic ideas. It's paired with that quote about science advancing funeral to funeral. The idea is you stack sats, accumulate sound money, and wait for the old guard invested in the flawed system to fade away.
The discussion even takes it a step further, suggesting the very foundation of knowing anything might be the axiom of action.
Yeah, this was a fascinating tangent from Breedlove, drawing on Mises and Hop. The axiom of action, the idea that humans purposefully use means to achieve ends. He hypothesizes this might not just be an axiom for economics, but potentially the only real first principle for all knowledge.
Why? Because you can't argue against it without demonstrating it?
That's the crux of it. To argue against the idea that you act purposefully, you have to use means, words, logic, to pursue an end, refuting the axiom. You perform the very action you're trying to deny. So the argument goes, action is ontologically prior, it comes before everything else.
So if that's true,
then Austrian economics, which is built explicitly on this axiom, shouldn't just be like a niche field. It should be foundational, the primary way we study reality. The source suggests we might learn more fundamental truths by studying human action than through almost any other method. It's a really bold claim about the centrality of this economic perspective.
follow us on Twitter at Snippet Labs for more updates. Okay, let's shift gears now. Moving from those deep economic and philosophical ideas to something very different but maybe equally critical for the future, fusion energy. We've got some insights here from Y Combinator.
Yeah, this is a really important spotlight because it tackles a huge looming problem. The energy needed to power the AI boom, these massive data centers, they are incredibly power hungry.
We're already seeing energy demand spike in the U.S. because of them, right? First time in ages.
Exactly, and the easiest, quickest response right now is often just burn more fossil fuels. The YC source positions fusion as the clean alternative. Safe, virtually limitless energy. The dream solution, really.
Fusion. It's basically making tiny sun on Earth, right? How does the science work in simple terms?
The basic idea has been around since the 30s. Fuse light atoms, release energy. First reactors popped up in the 50s. So unlike fission, which splits heavy atoms like uranium, fusion smashes light ones together, usually types of hydrogen. You have to overcome their natural repulsion, get them to fuse into a heavier element like helium.
And that fusion process releases a massive amount of energy.
A tremendous amount. A tiny bit of mass gets converted directly into energy, kinetic energy mostly. We're talking millions of times more energy per pound of fuel than fossil fuels. orders of magnitude more energy out than you put into the reaction itself. But to get there, you need plasma fuel heated to insane temperatures, like 100 million degrees Celsius, hot enough that electrons get stripped off and the nuclei move fast enough to slam together.
And the big challenge has always been containing that ridiculously hot plasma.
That's been the bottleneck for decades. Keeping that plasma stable, dense, and hot for long enough to get useful amounts of fusion. The source mentions the main approaches. You've got magnetic confinement using powerful magnetic fields, often in donut-shaped machines called tokamaks.
Right.
And then there's inertial confinement, blasting a tiny fuel pellet with lasers or electricity, crushing it so fast it fuses before it blows apart. Plus hybrids. It's just a really tough engineering and physics problem, a balancing act.
The big milestone everyone chased for years was break even, getting more energy out that you put in just to heat the plasma.
Exactly, Q1. And that was elusive for ages. And even then, just breaking even isn't enough for a power plant. You need way more energy out than the whole system uses. The National Ignition Facility, NEF, had that big announcement in late 2022.
Yeah, claiming they got more energy out than the lasers put into the target.
Right, a huge scientific step. But the source rightly points out that's still a long, long way from a commercial power plant actually putting net electricity onto the grid economically.
And fusion's reputation was always 20 years away with these huge billion-dollar government projects. But the source highlights Helion Energy as taking a different approach.
Yeah, Helion is one of the private players trying to speed things up massively. They're using a different design philosophy, combining existing ideas in a new way, aiming for smaller, faster, more commercial designs. They use a linear system, like a long tube, inject fuel from both ends, smash it together really fast under a millisecond.
That's their magneto-inertial thing.
Exactly. Use magnetic fields to accelerate the plasma blobs to over 1,000,000 miles per hour. They collide, then hit them with another magnetic pulse to compress them even further, get them over 100 million degrees, and bam, fusion happens super fast. The idea is this approach is potentially smaller, simpler, and quicker to build and iterate than those giant tokamaks.
And they made a really interesting fuel choice, deuterium and helium-3, not the usual stuff.
That's a huge difference. Most projects use deuterium and tritium, DT. But tritium is radioactive, it's hard to handle, hard to breed, and the DT reaction makes lots of high-energy neutrons. Those neutrons damage the reactor materials over time and make them radioactive, plus converting neutron energy to electricity isn't super efficient.
So DE3 is better how?
The DE3 reaction produces mostly charged particles like protons and alpha particles. The energy is already in electrical form, which is way easier to capture directly. And the really clever part, Helion claims they can actually make their own helium-3 fuel inside the reactor by first fusing deuterium atoms together.
So they don't need to mine the moon for A3 or anything?
Apparently not. That was always the catch with A3. But if they can fuse deuterium to make E3, then add more deuterium to fuse with the A3 to make electricity. That solves the fuel supply problem. It's a really elegant potential solution.
Then they capture the energy differently, too. No steam turbines.
Correct. Another key innovation, instead of using the fusion heat to boil water and spin a turbine like a normal power plant, they use a direct energy recovery system. They capture the energy from those charged plasma particles using the same magnetic fields that compress them. It's kind of like regenerative braking in an EV.
The fusion pushes back against the field, generating electricity directly.
That's the idea. The expanding plasma pushes against the magnetic field, inducing a current. They pull that electricity out, store it in capacitors, use some for the next pulse, send the rest to the grid. The source says this could be way more efficient, like over 90% conversion efficiency, making the whole system potentially smaller, cheaper, better.
Our whole development process sounds faster, too. Not the old slow way.
Yeah, they ditched the traditional linear design, build, test, learn, repeat cycle, which takes forever. Helion is doing it in parallel. They were running their 6th-gen machine, Trento, while already building the 7th-gen, Polaris, based on real-time data from Trento.
More like a tech startup, hardware-first mentality.
Exactly. Build it, test it, break it, learn, build the next one faster. Less waiting for theoretical perfection. That's how they got from early concepts to a 7th-generation machine aiming for commercial scale in under a decade. Much faster than the old ways.
And the goal isn't just fusion, it's electricity on the grid.
That's the absolute focus. They're aiming for commercial electricity generation. They've got that partnership lined up with Microsoft to potentially power a data center. It signals they're serious about deployment. If Helion or one of the other private fusion companies cracks this, It's revolutionary.
Cheapest power, abundant, carbon-free.
Game over for fossil fuels, potentially. Plus, it's inherently safer than fission, and fuels like DPI-3 can't easily be used for weapons. It could totally reshape the global energy map, boost living standards, and power all that AI we were talking about.
Fusion is definitely moving into the real possibility zone. Subscribe to the Snippet Labs YouTube channel. Okay, from that massive potential energy shift, let's zoom back into something very practical. Building a business. We got insights from Alex Hormozi on a super common problem. Entrepreneurs being incredibly busy, but not really getting anywhere significant.
Oh yeah, this is something Hormozi talks about hitting him personally. He had like 9 businesses, all kind of stuck at the same revenue level, just spread incredibly thin, totally overwhelmed, working constantly but not seeing real breakthroughs. The diagnosis, not lack of effort, but lack of focus, lack of concentrated energy.
Uses that magnifying glass idea, right?
It's a great analogy. Your talent, your work ethic, your potential, that's the size of the magnifying glass collecting sunlight. Big glass, lots of potential energy. But it doesn't matter how big the glass is if the energy is just spread out. You only start a fire when you focus all that sunlight onto one single point.
So in business terms, you have to pick one spot to focus on.
Exactly. She puts it really bluntly, like, you've got 5 kids, 5 opportunities. You got to pick the one that looks most promising, the 10-year-old, and pour your energy into that one. Stop trying to raise all 5 equally if you want one to really succeed.
And paradoxically, the more talented you are, the harder this gets.
That's the trap. If you're good, you see opportunities everywhere. You know you could crush several of them, which means you have more tempting things you absolutely must say no to. Your capability becomes a liability if it leads you to diffuse your focus. It's just the reality of making choices.
And there's a real cost to that diffusion versus the cost of focusing.
Huge trade-off. If you keep chasing everything, the price is you limit your impact. No single business gets truly huge. What you get is novelty, the excitement of new stuff. If you choose to focus, dig deep on one thing, build the teams, the systems, the price is you give up that novelty. But what you get is the potential for a really large, impactful business. You got to decide which payoff you want more.
And he suggests listening to the market to help decide where to focus.
Yeah, be a bloodhound for value, as he puts it. Don't just push your pet idea. See where customers are already showing up, what problems they're actually willing to pay you to solve right now. If people keep banging on one door, asking for one specific thing, maybe focus on that door. Stop trying to drag them over to the other doors you built.
Businesses often end up different from the original vision anyway.
Almost always, yeah. The successful ones pivot based on that real market feedback. They follow the demand. They don't just stick rigidly to the initial plan if the market's telling them something else.
And this kind of focus requires a certain loyalty to the chosen path.
It really does. Saying no sucks, especially when opportunities look good, but you have to accept you can't do it all. It's like trading novelty for loyalty. He compares it to relationships. You can chase endless new flings, or you can choose one person and build something deep and meaningful.
And sticking with one business lets you understand it much more deeply over time.
Yeah, like aging fine wine. You go through different seasons with the same venture. You see market cycles. You learn the nuances. You miss that depth if you're always jumping to the next new thing. Life's about trades. Trying to have everything usually means ending up with nothing really great.
He seemed to have this realization about his own limited big swings left.
Yeah, he mentioned realizing how much work it takes to build something truly significant and feeling this kind of deep sadness that maybe he only has like 2 or 3 real entrepreneurial seasons left in him to go all in on something huge. That's what led him to focus intensely on acquisition.com for the long haul.
Okay, so you focused, but entrepreneurs still have that itch, that creative energy. How do you manage that without blowing things up?
Right, great question. Hormozi's advice is channel that energy into things that add value to the current business. Make it accretive, not detractive. Don't start a side hustle that pulls you away.
Where does novelty actually help in an existing business?
Mostly marketing and sales, he argues. Coming up with new ads, new content, new angles, new offers. That's where the constant need for freshness is. He suggests putting your entrepreneurial ADD into content creation, write a book, make videos, do podcasts.
So it's a productive distraction?
Kind of. It keeps the entrepreneur creatively engaged, maybe satisfies that need for novelty, but in a way that promotes the main business instead of disrupting its core operations. He even joked his own business runs better when he's locked away writing because he's not meddling with the day-to-day stuff as much.
The danger being the board leader who keeps burning down the city with constant changes.
Exactly. Don't burn it down. Paint the city. Instead, add creative touches, improve the existing structure, make it better, but don't keep ripping out the foundations just because you're bored.
This leads to a really crucial point he made: the huge, often hidden, cost of making changes.
This seemed to really resonate with the listener in the source material. It's a big one. You don't have unlimited attempts to test major changes. Any significant change, new sales script, new onboarding process, new software, comes with a guaranteed initial dip in performance.
Like, things get worse before they get better.
Almost always. He mentions seeing things like a 20% drop in conversions right after a change. Why? Retraining takes time. People need to rebuild habits, systems get adjusted, mistakes happen. It's unavoidable friction. Even with something simple like a landing page, you can realistically only test maybe one thing properly per week if you have decent traffic. With people involved, major changes might only be feasible once a quarter per department.
He brought up the Warren Buffett punch card idea again here.
Yeah, applied to business changes. If you only had 20 punches on a card for major initiatives in your business's lifetime, you'd be incredibly careful about which ones you used, right? You'd make damn sure each change was likely to be worth the cost and disruption. It has to be a high probability shot with a big potential payoff.
So how do you filter ideas? How do you decide what's worth a punch?
His method is the big list of ideas. Get an idea, write it down immediately, but crucially, don't tell anyone. Don't start implementing it. Just let it sit there. Let it season for weeks, maybe months.
Like letting the initial excitement wear off.
Exactly. If you're still thinking about that idea weeks later, maybe it has real merit, like seeing something in a store, walking away, and finding you still want it days later. Then you'd try to realistically estimate its potential value and likelihood of success, rank it against other ideas on the list. You only pull the trigger and use a precious punch if the team actually has capacity and the idea seems clearly worth the guaranteed short-term pain and disruption. You gotta be confident it's worth detonating a bomb in the current system.
Which means accepting that sometimes some shit stays fucked.
Yeah, blunt but practical. You can't fix everything instantly. And trying to fix everything all the time often just creates more chaos. He argues many entrepreneurs change too much, too fast, without good data, so they never really know what worked or what broke things further. They underestimate the initial performance dip and are overly optimistic about the potential upside.
Tracking data closely is key to seeing that real cost.
Absolutely. Vague or infrequent data hides the pain of change. You need to see the immediate impact to make informed decisions. So the tactical takeaways were: channel ADD into creative marketing sales. Keep a seasoned list of ideas. Only implement changes that are clearly worth the guaranteed initial drop, treating each change like a limited resource. The source said this advice was tough but necessary hearing for the listener.
Drop a like and share if you find this valuable. All right, from managing entrepreneurial energy, let's swing back to the macro view and digital capital. This is drawing from Robert Breedlove reacting to Michael Saylor on Bitcoin's Endgame and MicroStrategy's whole strategy.
Yeah, this gets into Saylor's very specific, maybe even radical approach with MicroStrategy, MSTR. First off, Saylor makes it clear, MSTR is not trying to be a regulated bank. That term has specific legal meaning, specific restrictions.
But what are they trying to be?
They're aiming to be the premier company for Bitcoin-backed financial products. Think equity and credit instruments, convertible bonds, preferred stock, all built on a foundation of Bitcoin. It's about creating a financial layer on top of Bitcoin, not becoming a traditional deposit-taking bank.
And Saylor's conviction is legendary. Why 100% Bitcoin? Why not diversify like most companies?
His argument for a public company aiming for maximum performance with leverage is that Bitcoin is basically the only viable digital commodity. He calls it the one best asset, famously saying there is no second best.
Do the airplane analogy.
Right. You build a plane from aluminum because steel is too heavy, it won't fly. For MSTR's specific goal, high performance, levered exposure to digital commodity Bitcoin is the aluminum. Other assets are steel. He claims their models show 100% Bitcoin is the optimal allocation for their strategy. Diversification, he argues, just dampens volatility, which hurts their ability to create options and derivatives and dilutes the performance they're trying to capture and pass through via their securities. A diversified company couldn't issue securities that purely track Bitcoin's unique profile, like MSTR aims to.
Saylor's also a master marketer, using memes and simple phrases.
Definitely. In today's noisy world, you need messages that cut through. There is no second best. It's going up forever. Very simple, very viral. The source even mentioned the baby Saylor meme as an example of efficiently packaging the core idea. Breedlove connects this to the idea of money itself being like a meme, a data compression tool. Money compresses all this complex global information about supply and demand into a single price signal. And denominating things in Bitcoin, he suggests, gives the clearest signal over time, even with short-term volatility. That example of housing being down 99% in BTC terms over a decade.
Really reframes things.
Completely. It depends on your unit of account. Breedlove also distinguished memetic, like money compressing data, from mimetic, cultural idea transmission, like Dawkins talked about. The core point is, with attention spans so low, you need these potent, compressed messages.
Okay, what about MSTR's market cap versus its Bitcoin holdings, the MNAV? Could it trade below NAV like Grayscale's Trust did?
Saylor tackled this head-on. He argues MSTR is fundamentally different from GBTC. GBTC was a closed trust, very inflexible. It couldn't easily manage its capital structure, refinance leverage up or down. That's why it traded at a discount when sentiment shifted. MSTR is an operating company with way more levers to pull.
So it could trade below NAV, but maybe only if people lose faith in management.
That's the idea. If investors thought Saylor was acting irrationally, destroying value, then sure, the stock might drop below the value of the Bitcoin it holds. But, and this is key, Saylor claims MSTR is built to be anti-fragile. It's designed to actually profit from mispricings, even if its own stock is undervalued.
And what's the mechanism?
He gave this extreme example. Imagine MSTR stock gets hammered down to $1, way below NAV. He says MSTR could then issue, say, preferred stock, heavily over-collateralized by their Bitcoin, maybe 10 to 1, offering a decent yield. They could raise billions this way, then use that cash to buy back their own cheap common stock, driving the price back up. A closed trust like GBTC just can't do that.
So they actively try to monetize mispricings and maintain optionality.
Exactly. If the market prices their stock too low, they can effectively buy it back using Bitcoin-backed debt. If it's perhaps too high, they can issue equity. They're not trying to manipulate, but capture value the market temporarily misses. They create all these different types of preferred stock, different yields, convertible features, different currencies, USD, Euro, Yen, to appeal to various global investors with different outlooks on rates, volatility, policy, etc.
Giving them multiple ATMs, as he calls it.
Right. Straddling the traditional finance world and the crypto world, having access to capital markets globally. These different access points are sensitive to different economic forecasts. This allows MSTR to react quickly, hedge, buy, sell, raise capital on a massive scale when conditions are right. He describes this flexible structure as MSTR's core strength, allowing it to monetize volatility and grow its Bitcoin stack. And Breedlove has an interesting interpretation of this whole strategy.
Yeah, Breedlove sees it as a giant arbitrage play on the slow adoption of Bitcoin understanding globally. MSTR is essentially plugging into global credit markets, issuing what Breedlove calls inferior money, like debt instruments, to people or institutions who either don't get Bitcoin yet or can't easily buy it.
And using the proceeds to buy the hard money, Bitcoin. Precisely. It's like Gresham's law in action, bad money driving out good, but strategically. They're effectively leveraging the balance sheets of slower-moving capital pools around the world to accumulate Bitcoin. This access to global markets fuels that flywheel. More Bitcoin, higher perceived value, easier to issue more debt equity, buy more Bitcoin. It all hinges on managing the debt risk carefully, of course.
Saylor also brings up history, comparing Bitcoin to cash settlement with gold back in the day.
Yeah, he mentioned the Rothschilds settling big bonds with gold coin or bullion actual cash in the 19th century. He sees Bitcoin as digital cash, digital gold. Breedlove elaborates, noting cash comes from the French word for a money box for metal coins. True cash is final settlement. A bearer instrument, no counterparty risk, like handing over a gold coin.
Paper money isn't cash in that sense.
Not really. It's a liability, a promise from an issuer, and its value can be debased. Bitcoin, being a bearer instrument allowing final settlement without intermediaries, fits that historical definition of cash. This supports the whole layered money idea of Bitcoin as the base settlement layer, with things like Lightning or derivatives built on top.
So in this future vision, Bitcoin becomes the absolute center of the financial system.
That's Saylor's endgame projection. As Bitcoin grows trillions, tens of trillions, maybe hundreds of trillions in market cap, it becomes the apex asset, the king at the top of the capital stack. Other credit forms, government bonds, corporate debt, mortgages, they still exist, but they circulate on top of Bitcoin settlement, kind of like 19th century debt rested on the gold standard. Breedlove adds a twist, though. In a Bitcoin future, governments might shrink, can't inflate, harder to tax mobile capital. So maybe sovereign debt isn't the premier asset anymore. Other assets still exist, stocks, real estate, art, but Bitcoin is the fundamental root, the center of gravity for the 21st century financial universe. Even if you don't directly interact with it, its properties shape everything else.
Follow us on Twitter at Snippet Labs for more updates. Okay, how does artificial intelligence fit into this Bitcoin-centric future? It seems like another huge disruptive force.
This is where the sources connect AI, economics, and Bitcoin in a really thought-provoking way. Classical economics: land, labor, capital. The argument presented is that AI and robotics will drastically reduce demand for land and labor. AI replaces cognitive work, robots replace manual work. Demand for those inputs could fall off a cliff, like by 90% or 99%.
So what's left?
Capital. Capital becomes exponentially more valuable, and specifically, digital capital, Bitcoin. As AI and robots make us incredibly productive, creating potentially infinite stuff, all that unlocked economic value, that economic energy, needs somewhere to go. Where does it flow? Into sound money.
So AI doesn't necessarily mean hyperinflation of goods, but maybe massive appreciation of sound money.
That's the idea. The productivity gains show up in Bitcoin's rising purchasing power. The source explicitly pushes back on the mainstream idea that prices must always rise. A healthy market drives prices down by solving problems more efficiently. That freed up potential flows into the hardest asset available.
What does this mean for governments dealing with displaced labor and maybe pushing for UBI?
The source sees this collision, exponential AI productivity versus exponential fiat debasement, as potentially exposing government insolvency. Their revenue base shrinks or flees to Bitcoin. So yes, maybe governments push UBI to manage the social fallout of job displacement. But Bitcoin simultaneously empowers the sovereign individual, making it harder for governments to control populations or economies centrally. People might increasingly look away from politics for solutions.
Creating a divide between those holding private digital capital and those reliant on political redistribution.
Potentially, yeah. If AI creates near infinite stuff, how that abundance gets distributed becomes a key political and economic question. The source strongly argues you want to be holding the digital capital, the Bitcoin, because the AIs themselves, they'll use it.
Why would AIs use Bitcoin?
Because they're rational. AIs trading millions of times a second across borders won't trust counterparties who can debase the currency or block transactions. They won't rely on inherently political fiat systems. They'll need a neutral, trustless, purely digital bearer asset for settlement. Bitcoin is the logical choice.
Which leads to that idea of Bitcoin being the real Turing test.
It's a cool concept. Forget fooling humans. The real test of AI intelligence is, if it woke up, became truly sentient, would it do anything other than start accumulating sound money, stacking sats? If it's truly smart, it understands the game theory, the need for trustless settlement.
AIs in different countries wouldn't trust each other's sovereign currencies.
Exactly. They'd converge on the neutral, non-sovereign, trust-minimized option, Bitcoin. This is presented as incredibly bullish for Bitcoin long-term. Even if you don't know how to build AI yourself, the source suggests the easy answer to profit from the AI boom is just to buy Bitcoin and wait for the capital generated by AI productivity to flow into it.
Drop a like and share if you find this valuable. One last point on this, the concern about decentralization. If huge players like MicroStrategy or BlackRock hold massive amounts, doesn't that risk centralizing or compromising Bitcoin?
Both Saylor and Breedlove argue no, not fundamentally. One entity holding a lot doesn't break the protocol itself. Bitcoin's security and resilience come from its distribution. The miners, the nodes run globally, the millions of individual holders, the exchanges, the derivatives markets, even the regulators interacting with it. It's a global ecosystem.
So MSTR buying loads actually helps everyone else.
That's Saylor's point. The more aggressively someone buys, the more they bid up the price and contribute hash rate, if they mine, strengthening the network for all holders, even people they disagree with. MSTR's buying created way more wealth for other holders than for MSTR itself. It's a great equalizing force.
Wait, a perfect machine made of imperfect components.
Yeah, that captures it. The protocol works regardless of the motives of individual participants. It's money for enemies, the agreement of the disagreeable. People hold it for self-interest, but that self-interest collectively strengthens the network. Trying to attack it or take it over seems impossible. Attacks just make it stronger, forks get ignored, criticism spreads awareness. The meme is still in your mouth.
It's anti-fragile in Taleb's sense.
Exactly. The more it's stressed, attacked, adopted, regardless of the entity's values, the more robust and indestructible it seems to become against the next challenge. Every interaction, good or bad, just seems to harden it.
Wow, okay. We have really covered a massive landscape today. From like the bedrock principles of economics, time preference, property rights,
Yeah.
all the way through fusion energy's potential, the need for intense business focus, and then this deep dive into Bitcoin, Saylor strategy, and how it might intersect with AI and the future of money itself.
It really is fascinating how they connect, isn't it? That long-term thinking, the low time preference that sound money encourages. It seems essential for accumulating the kind of capital needed for massive undertakings like fusion or building out global AI infrastructure.
Right. And Hormozi's point about needing intense focus to build anything significant, whether it's a business or maybe even just navigating these big shifts personally, that feels super relevant when you hear about potential phase changes driven by Bitcoin, AI, and energy tech.
Yeah, that collision course. Exponential productivity from AI, maybe fusion down the line, crashing against exponential fiat debasement. It feels like a really critical moment. The sources definitely make a strong case that maybe only a form of money that's outside political control, like Bitcoin, can really function reliably in a future like that, where value moves at machine speed and trust might be scarce.
It definitely makes you think differently about what real wealth is, what drives progress, and where power might actually reside as things change so fast.
Yeah.
What assets are really durable, which systems are truly resilient, and how do our own choices about patience, about focus, about the principles we follow help us navigate all this. A lot to chew on there. Ideas ignite empires. Pay attention to the sparks.